All right, everyone, what is up? Hey, I'm excited to be looking at Gilead Sciences, their drug Remdesivir for the Rona. Very exciting. It's a really crazy time, and if you're thinking of investing in this company, we know that they have FDA approval. They're the only one that has FDA approval for the treatment at this point. There's a lot of other companies, of course, Chinese companies, U.S. companies, companies all over the place that are working on a vaccine. So the price just came out, and we know what it's going to cost for people who are insured under the U.S. healthcare system in the States, as well as people who are privately insured. We also know what it's going to cost for folks outside the U.S. if they're in a developed nation. And we also have some data on what it's going to cost for folks in developing countries. So what we're basically going to do is look at a couple different things. There are going to be some assumptions, so you need to kind of track with me about where I'm getting this stuff. But I'll show you each and every step. And we're going to try to basically find the earnings per share expected. We're going to apply a PE ratio. And we're basically going to try to come up with some kind of estimate, future-looking estimate of what the stock could be worth given all these changes. So I'm excited. Let's jump into it. So here's the model. It's real simple. It's, just back in the napkin type stuff. Basically what we're doing is we're starting here with just two categories. We're going to run numbers for the U.S. and then also for everything outside the U.S. So hospitalization data is what we're going to look at. We're going to look at the percentage of people hospitalized. We're going to factor in the population infected that we think is going to occur. We're going to look at the total number of people, a price target for the treatment, and we're basically going to come up with expected Remdesivir annual revenues. And then we're going to apply that on top of what the company already makes, and we're going to do some future calculations moving forward. So one thing, I used to live in Florida. I have a good friend that has done a lot of great stuff. I'll throw in the description box a power analytics thing that he did on just the data that's coming, public data, but it analyzes it, looks at a lot of different factors. What they found basically down there was about 16,000 people out of the 180,000 cases in Florida ended up being hospitalized. Now, why I'm starting there is that we know that Remdesivir is distributed or given intravenously, so it really needs to be in a hospital setting. We also know that it's mostly for those acute cases, those cases where it drops people's hospital stay by like 25-30%, depends upon what you read, but trims off a couple days, help people recover more quickly in those really severe acute cases. So the percentage of 16 over 180 is about 8.8% of people who contract this end up with going to the hospital. I dropped that number a little bit for internationally because I know that, in developed nations, you have a lot of socialized healthcare, even more access than the U.S. But if we're going to factor in developing countries, we know that it's not going to be that high. That's an estimate, but that's what I chose. So 8.8 is pretty reliable. 6%, you could say, yeah, no, as you like. But anyway, now we're going to be looking at the percentage of the population affected annually. So we don't have great data for that. But one thing I went and I did was I want to find a conservative number, So what I did was I just went and I just asked Google, I looked at WebMD, number of people that contract the flu. And this says it's about 5 to 20%, which is a pretty large range. And then if we go down here, we can get another stat from the CDC, 3 to 11% range for people who contract the flu. So, those are estimates, and you have to use something. Now, some people might say, well, you might have a 50%, 40%, 30%, maybe even higher. It just depends. But we don't know. We really have no idea, right? There's no way we're going to know that. So we just have to take some kind of estimate. So I went with 8%. That was on the low side between the 5 and the 20%, and it was in the middle, maybe on the high side between the 3 and the 11 that we saw from the CDC. So I picked 8%, and I applied that for both nations. Now, I think that that's very conservative given what we know about this. Then you have the population, so 330 million Americans. This is a pretty arbitrary number, but I just picked 400,000 international. So now we have the price per treatment, which I said we know. We know that it's. I took this number from this article here from Wall Street Journal, but I'll give you the rundown. It's $390 is standard for U.S. government health insured, and for everyone else in developing nations, meaning that the full treatment is about $2,340. That's the standard price. There's an upcharge for people in America who have private health insurance, and so that bumps it up from the $390 per vial up to $520, which raises the total treatment cost to $3,120. Now it's about $630 total in developing nations, and we'll jump over here. So jump over here real quick and look at this article from the Wall Street Journal. Basically, this is what they're saying. The $390 a vial is the standard 5-day treatment with a double dose on the first day. So six total vials for $2,340. There's some other data about how much it costs, and this is the other interesting one. So India and Bangladesh have announced Remdesivir prices for healthcare providers between $60 and $71. So I went for the low end on that. I just did 6 times 60 and came up with that $360 price that you saw right here. So that's where all that information comes from. Now, the other thing that we need to know is how many people basically in the States are on private insurance. And this just says, this is from the U.S. government, that about 67% of people are on private and about 34% are on government. So public coverage, they call it. So we're just going to add that, throw that into the mix. Real simple, right? We're just doing a weighted average on that number then at that point when we're looking at the prices, price per treatment right here. We're just taking the 67% times the expensive one and then plus the 33% on the standard rate. Gives us an average of about $28.62 per treatment per person. A little bit different. I just did a 50-50 mix between the 360 for the developing nations, and then I just split it 50-50 between the developing and the developed countries. Because, I mean, that's maybe fair, not fair, but I just wanted you guys to know how I came with these numbers. So then we arrived to, we basically multiply all those things. So we're taking the population times the percentage of people infected annually times the percentage of those people who end up in the hospital, and then we're going to basically apply some kind of price per treatment. So now, like I said, those are pretty conservative numbers here, and this is also a very conservative number here, the 400 million. So these are pretty accurate. This should be on the low side, percentage infected annually. So if you don't like these numbers and you want a conservative one, you might want to drop that a little bit. But essentially what that is going to give us is about 6.6 billion annual revenue in the States and another 2.5 billion internationally. So summing those up, we come with about 9.24 billion in expected Remdesivir annual revenues. Now, the next thing I realized we need to do is we need to discount that to some degree, because it's not like Gilead Sciences is going to be able to collect every dollar of that $9.2 billion. There's going to be competitors. And so I said, you know what, let's assume that they lose half of that to some competitors. Maybe people have antibodies. We don't know. We don't know if it's how that goes, if people can contract it more than once. There's just not a lot. I mean, there's some stories, but nothing substantial that I would say at this point that would say yay or nay on that point. We don't know if people are going to be able to come out with a full-blown vaccine. So, but there may be some other treatments, and we've heard about those along the way. So let's say that they only get about 50% of the total that they might be able to collect globally from the Remdesivir sales. Again, want to be very conservative, because these things, who knows how it goes. Now we know that their profit margin at Gilead, they had about 5.39 billion in earnings on 22.45 of sales. So that's about a 24% profit margin. So if we take that profit margin times the expected revenue to Gilead from the Remdesivir sales, that's going to tack on about another 1.1 billion. Now they're already earning about 5.4. So when we add those up, the 5.39 billion plus the extra from the Remdesivir, it puts them at about 6.5 billion dollars. Now they have 1.25 billion shares outstanding. So that would put us at a EPS, earnings per share, with Remdesivir at about $5.18. Now, if we go back, if you were to go on Yahoo Finance and take a look at the PE ratio that they have posted right now, it's going to be at 19.6 multiple on that. Now, one thing that we know that currently today, at the time I'm recording this, the stock is trading about $76. And so if we were to apply that PE ratio, that would mean that they have only 3.9 in earnings per share on the year. But we can go back and actually calculate that. So here's some of that annual data that I just got done throwing you guys, was the revenue in 2019. These are the 2019 numbers. So the 5.39 billion earnings on the 22.45 billion in revenue. This is here, Gilead Sciences, trading at 76.35 over the holiday weekend. Happy 4th, everyone. Now, the other thing we can do is we can go back and we can look at the earnings per share over the last 4 quarters. And so we can just really add these up. This is 182. I know it's hard to see. 175, 130, and the actual on this one is 168. So you can add that up and it comes to $6.65. Yeah, no, 6.55. So if you were to hold on to that PE multiple of 19.6 times, and you knew that the last 4 quarters had earnings per share of $6.55, then applying that multiple, you would need to have a share price of $128. So it's not trading at $128. It's trading at $76. So the other thing that we can do is we can go back, and if we can look at just say the average price over 2019, we can go back and look at their chart, Gilead Sciences again, starting in January 18. So this is just starting in January 2019. We're really interested in what was about the baseline price per share over the last 4 quarters. So this is March 18th. It's trading at 63 bucks, 65, 66. You know, it does take that jump kind of at the end of the first quarter, and it trades up to about 76. So I'm going to say on average it's about a $67 stock over those 4 quarters. I think that's pretty fair. So what I said here is average price over those 4 quarters of about 70 bucks per share, divided by the earnings per share that we know of $6.65. That gives us an actual PE of about 10.5 times. So if you then just take this earnings per share that we calculated based on our assumptions, if you put the 19.6 multiple on there, it's about $101 stock. If you don't think that it is going to trade at that multiple, if you don't think that people are going to be willing to put that kind of money onto it, they don't think it's worth that, then maybe $54 stock. So that's a big range, but of course it has a lot to do with the differences in the multiples. Now, one thing that we could do is we can go back here and change some things and update, how it goes as far as the ending stock price. So one thing, instead of having 400 million people outside, you could do, let's just double that. You could do 800 million people outside the states. And you might want to increase this rate of infection. I don't really know how fair this is. I guess we could go 20%. I don't know. I really have no idea what's going to happen. But if you change those two numbers, you could see how much before we were at $29 billion now, before we were only at $9 billion. So changing those two things, adding another 400 million people outside of the states, and changing the infection rate to 20% jumps this up to $29 billion in expected Remdesivir revenue on a year-over-year basis, on an annual basis. We still keep this the same, that they're only going to collect half that money. But at that point, the EPS jumps to 7.13, and it drives the stock up considerably. On the lower end, 74 bucks, about where it's trading now. But on the upper end, if you have these still multiples that people are willing to pay, 19.6 multiple, then you're looking at $140 stock. So that's a doubling. And I want to show you that. I didn't just make this up. This is the summary statistics, 19.6, 12 trailing months on the PE ratio. And they're predicting a current earnings per share of $3.90. So on both of our estimates, those are forward-looking estimates. This is the current earning per share. On the spreadsheet, we're looking at much higher, either 5, or if I made that adjustment now, it just went to 7. But if I do Control Z and go back, I'll change that right there. Maybe somewhere in the 543 zone. So it does matter. It definitely matters. But one thing that they have, if you go to their analysis tab, it'll give you a lot of people looking at their expected earnings per share. And I thought that was really interesting. Earnings history. So the actual is this is start of the third quarter, 2019, start of the fourth, and then start of the first quarter, 2020. So 1.7, 1.8 earnings per share. But if you look at the trends, you have a lot of people, once you get to the current year, 2020, EPS trends, you have a lot of people expecting 648 estimate, which is higher than what we were looking at. 640, 627, 623, and then pretty similar numbers in 2021. So, if we were to say dump any of those numbers into that model, we'll just say, $6.30. If you were to put that in here, we could do that. 6.3. $123 a share, or $66.15 a share. So, it just depends a lot on the assumptions, but I thought that was an interesting way to look at it. You can copy this, change it however you like. It's no big deal. But that's the essential strategy. I'll go through it one more time. Hospitalization rate in Florida was 8.8%. Percentage of the population that might be infected annually, I took a conservative number of 8%. We know the U.S. population is 330 million. If we consider a population of 800 million outside the U.S., and that's very conservative, we multiply that times the price, the weighted price, whether developed or undeveloped for each region, the U.S. or outside the U.S., since there's different pricing targets in each, coming up with somewhere once we saw it at like 9 billion. This is 11.8 billion. We stick on a pretty arbitrary amount of money that they're going to keep after any loss to competition, 5.9 billion. This is annual numbers. We know that their profit margins are about 24%, and so that means the earnings from the Remdesivir calculation that we had was about anywhere from like 1.1 to 1.4 billion dollars. So if you tack that on to what they're already expected to earn, it's about 6.5, 6.8 billion. We know that there's 1.25 billion common shares outstanding, and so that'll get us to a price earnings per share of about $5.43. Then it really comes down to the multiple that you think is reasonable. I mean, a lot of people say the stock market is very overpriced. I mean, there's a lot of companies, tech companies especially, 5G companies that are trading 60 times. There's REITs, digital REITs, ones that do data warehousing, data storage, trading 60, 70, 80, 100 times earnings. So here, I mean, these are pretty low numbers, 19.6, and especially 10.5. This is really low. And so, of course, I mean, I try to take a lot of just, like I said, back of the envelope calculations. Maybe only 10 factors that we're looking at. A lot of them that we had to make some educated guesses on as far as the assumptions that we were making. But it really is interesting. I bought in when it was high, over $83, and then it's just kind of sat at $75 for a long time, 75, 74, 76, hasn't really gone anywhere, which I thought was really interesting given that it did have the FDA approval. That I don't know, it's interesting that they gave away all those free vials, but I think that was a very cool move on their part. We know the prices now, and of course, a lot of other companies are working on a full-blown vaccine. We don't know a lot about antibodies. We don't know about what's going to happen when economies really need to open up. But I just thought one interesting thing about it in general was if you think and start doing the calculations of what is this worth given the effects that this thing has had on GDP globally. I mean, how many trillions of dollars is that? And so, the price to consumers is one thing. The cost of production is another thing, but I think the value that it brings to society is huge. I mean, huge, huge, huge. So that's why I'm hanging on to it. I've got about 17% of my portfolio in Gilead Sciences. I'm not buying more yet. I want to see a little bit more price improvement, but I'm also not selling. I think it's really interesting. I definitely don't want to sell at a loss, and that 3.5% dividend is okay with me. So I'm hanging in there. I hope you guys enjoyed the video. Please like it. Helps with the algorithm, of course, on YouTube, and good luck with your investing. Thanks. Oh, let me know what you thought I missed. I mean, if you have another angle, if you think that there's some other interesting part about it that I didn't cover, I mean, please, by all means, share, let everyone know, okay? Thanks, bye.